Hi everyone, welcome to Logical Investing with Shubhendu. I will be talking about an interesting stock called Basant Agro today. So without any further ado, let's get started with the stock analysis. Alright, so Basant Agrotech India Limited is a manufacturer of various farm inputs in India comprising of NPK mixture granulated fertilizers, phosphatic fertilizers as well as various hybrid seeds. So what basically they do is nitrogen, phosphorus and potassium NPK mixture fertilizers is what they do. Now if we go into details, the company mainly manufactures SSP, which contains phosphate, sulfur, calcium and other micronutrients for nitrogen, phosphorus, potassium fertilizers, and also processes hybrid and straight variety seeds. The manufacturing facilities of the company are based in Maharashtra, Karnataka, Madhya Pradesh. Right? And it is also engaged in generating alternative energy through windmills with total capacity of 3 megawatt and in operating warehouses and cold storage facilities as well. Further, its trademark brand, the company's trademark brand is Krishi Sanjeevani, which is a well-recognized one in the farming community in these states. The company spent 18 lakhs on R&D activities in FY21. We will just go on to their website. So this is how the homepage of Basant Agrotech looks like. They are the largest producer of OP and hybrid variety of seeds in and around India. This is a growing business. This is an evergreen business. This, as long as we are focused on agriculture, we will absolutely have fertilizers, and NPK fertilizers are, most widely used. Let's go back to the company's details and probably look at it in a bit more detail. So market capitalization of the company stands at 165 crore. It's a very micro cap, company. The current price of the stock is about 18.2. The overall book value stands at 15.7. So it is the ROCE of the stock is at 7.5. ROE return on equity is about 6.75, which is good. Promoter holding stands at about 53%, which is also good. And the company, if you look at it, for a company with a market capitalization of 165 crore, the reserves of the company itself is 133 crore. That speaks volumes that the company has cash, and it is reserves are almost close to the market capitalization. Now, if we look at the change in promoter holdings in the last 3 years, we have seen that marginally they have increased. Promoters have increased their holdings. Now, if you look at the debt to equity ratio, this is very favorable. This is okay. I mean, it's not zero, but then it is definitely well under 1, which is a very acceptable level. 0.29 is an acceptable level of debt. It says that the company will be able to manage its debt at any point in time because the ratio of debt is really low. If you see, the company generates free cash flow of about 8.8 crores and the industry P is at 12, the company stock P is at around 11. So it is decently valued. Now, why does this stock then, if it is already decently valued, why does it make sense to start looking at this stock? Now, should we please do understand that this is not a buy or sell recommendation, right? This is not at all a buy or sell recommendation. The reason why we are taking up this particular stock is because first of all, there are some of these parameters which make it look really attractive, and I'm also going to talk about what are some of the things which made me to look at this stock. Understanding different parameters based on which you will pick up the stocks is important. Rather than picking up this particular stock, please do your own due diligence and please speak to your investment advisors before you take any call. This is not a stock recommendation video because I am not a stock investment advisor. Let's go back to the fundamental analysis of Basant Agro. If you look at the Altman Z-score, this stands at 3.3. Now, any company with an Altman Z-score of more than 3 is good. PEG ratio is not okay because PEG ratio has to be less than 1 for it to be good. PEG ratio of 1.16 clearly says that it is slightly overvalued. Current ratio is at 1.66, quick ratio is at 0.57. Now, current ratio tells clearly that if it is more than 1, it tells you whether the company is able to meet its short-term liabilities and short-term requirements, and 1.66 is good. Quick ratio of 0.57 is not okay, but we will skip it and we will move on to the next one. Now, if you come down in the last 1 year, the stock has stock was almost trading at around 6 rupees levels and then 6.6 and then it is almost trading at 18, which is almost 3x from its starting price. In 3 years, if you look at it, the stock has been from 3 rupee levels to 18, so it's almost about 6 times, right? And in 5 years, if you see, it's almost similar. It had completed a rounding bottom pattern, and then it is making newer highs with higher highs and higher lows. If you look at the maximum, then it has been fairly stable. This level, the level of 10 rupees, has always been kind of a resistance, and the stock tried to touch it first in 2008 time frames. Then it would try to make it again in 2014, and then again in 2016, 17, and then it made a rounding bottom pattern, and then now it has given a breakout from the 10 rupee levels. And then when it came down also, it didn't touch the 10 rupee levels anymore. From 12 it started moving up again, which clearly says that the stock has made a significant jump over its multi-year peak, which it was trying to cross. Now, if we start looking at the earnings of the company, you see that the earnings have been, the earnings continue to grow up in the time frame, this 2014-15 time frame. It came down and it is again going up. Now, if you look at the PE also, the stock is showing good amount of PE expansion here. So now, having said that, we will start looking at some of the quarterly results numbers which are coming up, and you see that overall in March 2019, so this is quarterly results from March 2019, you see that sales has grown from 66 crores to, in December, this December it is 79 crores. So if you really look at it, the sales have been kind of flat. In between, some quarters have given 106 crores, and then there is 117 crores. It came down to 49 crores in December 2019, and so on, right? If you really look at a pattern, you would see that December quarters are, in the last 3 years, I'm saying, December quarters are the kind of the lowest ones. For example, in December 2019, you have 49 crores, and then in December 2020, you have 55 crores, and December 2021, you have 80 crores. So, if you really look at it, in December 2020, there was kind of a dip. In December 2021, it has actually surpassed the December quarter for December 2020 and December 2019 as well. Now, if you look at the September quarter, this September quarter was 76. If you look at September of last year, it was 67. So there also it has done well. And in September 2019, it was 62. So 62, 67, 76. If you look at the June quarters, 106. 117, 149. If you look at the March quarter, 66, 67, 82. What I'm trying to say is, this company, in the last 3 years, even though the sales have been flat, if you look at the, if you look at the quarterly revenues, you would see that there has been a significant increase. The sales have been increasing, and in fact, from last year December to this year December, from a 55 crores in December to 80 crores in December this year, or 2021, this is a big, massive jump, right? If you start looking at the expenses have grown from 60 crores, 61 crores to 72 crores. Operating profit, if you see operating profit on quarterly basis, almost at 5, 6, 3, 5, 6, 3, 2, 6, 8, 5, 7. This is the first time the operating profit has crossed beyond 6 levels, right? And so operating profit, and if you look at the operating profit margin, you would see that 8, 6, 6, 8, 5, 4, 7, 6, and 9. What this clearly says is, the company is, while the company has also increased in its sales, the company is also focusing on its operating profit margin improvement, and because of that, the operating profit margin improvement, the company is also posting a higher profit before tax. You see here, we have profit before tax in this quarter, in December quarter, is 4.84, which compared to December quarter of last year, which was at 0.94. December 2020, the profit before tax was 0.94, now it is 4.84. Massive jump. The earnings per share was at 0.09, that has become 0.43, almost 5 times. And then we see that the sales in March 2010 was about 128 crores. Today it is about 389 crores in the trailing 12 months. If we start looking at the operating profit, which is at about 14, today it stands at about 27. The operating profit margin, okay, initial years, operating profit margin was higher, 11, 10, and then 9%. Today it is stabilizing around 7, 7, 6, and 7%. Now 6 and 7% is a healthy margin, and that continues to increase, and now the company is also taking steps to increase the operating profit margin. Now in the balance sheet, we start looking at the share capital. If you see, share capital has increased marginally from about 8 crores. It has become 9 crores in September 2021. Reserves, if we see, from 35 crores it has grown to 133 crores, which is almost about 4 times the size. And if you see the borrowings have kind of been constant. In between, there have been ups and downs. So it started with around 42 crores, and then today it is continuing at about 42 crores. In between, it had gone up to about 130, 139. Then it started coming down from March 2016 or March 2015. 139 crores, 123. 104, 73, 60, 38, and 42. There has been marginally increase here. But then overall, the borrowings have been coming down. In terms of other liabilities, if you see, other liabilities also, they have grown from 31 crores to 97 crores in September 2021. Now, in terms of the total assets, we see that 281 crores is the overall total assets of the company. Now, looking at the cash flows, is the company really making cash? If you see, cash from operating activity is the cash which is generated from the true business of the company. The investing activity is where you are putting the money, you are making a purchase of an asset, or you are purchasing investment. Those are secondary activities. Cash from financing is the kind of loans you are taking and what kind of money you are making or you are paying. So those can be negative. Barring these years, March 2011, March 2012, these 2 years, in the last 10-11 years, the company has always been a positive cash flow generating company. What that basically means is a company which is of small size, who is consistently able to generate cash, is really, really important, and Basant Agro has been able to do that. Now, if you start looking at the debtor days is the amount of days which it takes to realize the money to whom the company has sold its products. If we look at it, in March 2020, the number was at 93, and that has come down to 62 in March 2021, which is a very, very good sign, right? Similarly, the cash conversion cycle has also come down. If you see, days payable has grown, which is okay. Inventory days has grown marginally from 151 to 171. Working capital days has significantly reduced. Working capital days has reduced to 101 from 132, 140, 176. If you see, the working capital days have been coming down since March 2015. If you look at the shareholding patterns, promoters had 51.16% of shares in March 2019. They today have 53% in December 2021. DIIs have very less shares, and then public had 48.8. Now they have 46.93. Now we understood that the overall company structure, some of the data points look okay, some of the data points are a bit weak. We did see that. We will start looking at the credit rating of the company. If we start looking at the credit rating and drivers and description, so this has been done by ICRA, and ICRA says that the credit strengths of the company is they have established presence in Maharashtra, Karnataka, Madhya Pradesh, extensive experience of promoters. So promoter experience is something which is very valid, and that is there in the company. Location advantage with plants in interior areas to facilitate better access to consumer markets. So this company definitely has a better location advantage with plants in interior areas, right? And moderate debt coverage. So the net worth base of the company remains healthy. That is what the company says. Now there are some challenges as well. What are the challenges? The challenges are working in capital intensive nature of operations, owing to seasonal nature of the business. This is seasonal because this is agri-business, right? This is tied to agriculture season. So they definitely, what did we also saw while we were looking at the quarters, that the June quarter continues to be the largest quarter. So having said that, the company's quarterly revenues compared to the last year have been growing, and then the June quarter is expected to be even bigger compared to as we saw in the trend. So the company definitely is going to post some great results by the end of this year. That's as per my analysis. Please do not take any call based on my discussions. Please do your own due diligence. Scale and profitability is susceptible to volatility in raw material prices and vagaries of agroclimatic conditions. What that basically means is this is normal. Any business will have this. They will have susceptibility to volatility in the raw material prices, right? So this is something which is there. Exposed to regulatory risk. Now liquidity position is adequate. Basant Agro Tech India Limited has had a positive fund inflow from operations generated over the last 3 years. It also says ICRA may upgrade the ratings if the company is able to register significant increase in the scale of operations while maintaining the profitability and efficiently managing working capital cycle on sustained basis. See, this is what we were looking at. The overall earnings per share is increasing. The overall operational profit margins, operating profit margins are increasing, right? If the company is able to significantly increase the scale of operations while maintaining the profitability, we are good. Then this definitely ICRA may upgrade its ratings even further. Today, if we see the Basant Agro Tech India Limited long-term rating upgraded to BB plus, outlook revised to stable, short-term rating is reaffirmed. The recent quarterly result, this came out a couple of days back, and Basant Agro Tech, if we start looking at the revenue from operation, this we have already seen, the December 2021 quarter compared to the December 2020, which was at about 55, I think this is in lakhs, so 55 crores. Now the revenue stands at 80 crores almost, right? 79.43 crores. If you come down, if you see that the expenses, the cost of materials consumed, change in inventories, if you take all of these expenses and then take out the exceptional items, and then you see the profit before tax, you see that from 94 crores in December last year to 483 crores in December of this year. This is what I was talking about, that overall the profit of the company has grown multifold. The revenues have also grown multifold year on year. I would say that this looks good as a company. Now let us look at this. The company is trading at about 18 as of now, and there are good volumes. If you see, there are good volumes at these levels. There are some good volumes which are out there. Now we understood the company's fundamentals. We understood the company's business. We know that it is a seasonal company. We know that there are some factors which are not looking really good, such as the quick ratio was not really good. We also saw that it is a seasonal business. So, and we also saw that, there is dependency. There is debt on the books. Even though the debt is low, there is debt on the books. Now, in spite of that, does it look attractive to me? Why does it look attractive to me? First of all, it's a very small cap company. Over the last many years, the company has been in existence. It is part of that 130-year group. And one other thing to see is that the sales, even if they have not grown too much, but they have not deteriorated. So the company is able to scale. Right? The company is able to grow. Second is its profits have been growing. So it is trying to get more and more effective as a company. And they have been generating profits as well. And the best part is there is positive cash flow, which is a big plus. Positive cash flow, which has been getting generated since the many years. I would say that a company like Basant Agro, which has also, almost grown 15-16 times in the last couple of years, companies which are consistent in generating profit, companies which are consistent in giving returns on capital employed, they are the kind of companies which I like. And some of these can even turn out to be great companies of the future. See, some of these companies who we are picking up, they look like very regular companies, and all these companies are regular companies only. They will do business in their regular way, and they will keep acquiring new customers, keep adding their product lines, and make sure that if they are able to sustain their operating profit margins and better them, they are able to increase their sales, they definitely will continue to grow and someday become the market leaders as well. So having said that, I feel that this is a good stock to keep a watch on. You please do your own due diligence and then only take a buy or a sell decision on this stock. My purpose is just to share with you the way I think, the way I have arrived at this stock. For me, this stock is healthy, and please do your own due diligence discussing with your investment advisor. Thank you so much. I hope you liked this video. If you did, then please do like and share the video with your friends. And also, if you are new to the channel, please do subscribe to the channel. And I would definitely make efforts to come up with more such videos and good analysis, so that you and I can both learn from that analysis and be able to be better investors. Thank you for watching the video. Happy logical investing.